Good day everyone, this is the report of Group 5 and we will be talking about the accounting for freight or freight accounting. And this is Crisogini Pumoseno, your first reporter. So now what is freight? So freight refers to goods being transported from place to place. It is a cargo or goods transported by a truck or other means of transportation, or the amount you are charged to transport goods. Now, freight accounting. So, freight accounting is an accounting that tracks the expenses associated with sending goods from one location to another. So, sometimes freight is shipped from manufacturing warehouse of the company selling the items, or the items may travel from a company to retail location or directly to the customer. Now, let's proceed to the next reporter.
So front in or shipping expenses that we paid on the merchandise we brought is front in, which is to be recorded as a debit to front in. Front in is not expenses but treated as cost, which is an addition to purchase. Thus it is considered an adjunct account. So to illustrate, paid front on shipping of merchandise purchase is 5,000 pesos. So this is our journal entry. Rent in, the debit is 5,000 and the cash is in credit is 5,000. So we are now in a selling activity. In this activity, the business in the seller, it may sell merchandise to customers either in cash or in credit term. So the selling price of an item is composed of the cost of the merchandise upon purchase and the amount of profit added to it. And if the business brought merchandise at cost of 20 pesos each and the amount of profit is 1 to half is 10 pesos, the selling price is of the item is 30 pesos. To simplify, we didn't say that 30 pesos represents the selling price and 20 pesos represents the cost of merchandise sold and the 10 pesos represents the gross profit. And the merchandise sold is recorded by the business as a credit to an account called a sales, which is an income account. To an account called when we sell the good of merchandise we bought, we are liable of VAT of 10% on such sales. The tax on our sales called output tax. So, given our two cases, which will illustrate the sale of merchandise in cash, and the other or on account. So, first is assume the merchandise we bought costing 20,000 pesos was sold is 30,000 pesos. So, our gross profit is 10,000. And case number 1, if sold in cash, this is our journal entry. In our cash, our debit is 33,000 and the sale is in credit is 30,000 and on output tax is 3,000. This is the record sales of merchandise in cash. So in case number 2, if sold on account, this is our journal entry, and in our account receivable in debit is 33,000 and our sale is in credit is 30,000 and on our output tax is 3,000 in credit. So this is a record sales on account. Take note, as compared with the journal entry in case 1, it differs only on the account being debited, which is account receivable instead of cash. In our upon collection in our account in cash is in 33,000 in debit and accounts receivable is in credit is 33,000. This is a record collection from customer's account.
How to record sales return and allowance. When the business receives returned merchandise from the customer for reasons already explained and that no replacements were made, the business will prepare and issue a credit memo to the said customer, informing the later of adjustments made on the billing so that the customer can also make the corresponding adjustments in his records. The amount of merchandise returned by the customer will be recorded in the book of business as a debit to account. Sales and return allowances. which has the effect of reducing the account sales. Given are the two cases which will illustrate the receipt of merchandise returned by the customer which was sold in cash and the other on account. Assume of 30,000 pesos worth of merchandise sold by 5,000 pesos was returned by the customer. Case 1. If the merchandise was sold in cash and returned by the customer. Journal entry, account, sales return and allowances and debit 5,500, output tax and debit 500 pesos, cash in credit 5,500 to record cash refund merchandise returned by the customer. Sales discount is computed after taking into consideration sales return and allowances and determined in the same manner with that of the purchase discount. Cash discount in an inducement is usually given by the business to each customer so that the latter will pay his account at an early date with the discount period. Cash discount, journal entry to record to sale. Account receivables in debit 33,000, sales in credit 30,000 pesos, output tax 3,000. Assume a 2% discount is given to the customer upon collection. The record collection, cash in debit 32,000 pesos, sales in debit and sales discount 600 pesos, output tax in debit 60, account receivables in credit 33,000 pesos. Trade discount. If the 2% is given to the customer as a trade discount, no sales discount is being recorded. Using the illustration, the journal entry to record sales with 2% discount is cash in debit 32,340 pesos, sales in credit 29,400 pesos, output tax is 2,940. To record merchandise sold in cash with 2% discount, trade discount, P 30,000 times 98% equals 29,400 pesos.
So it is mentioned earlier that freight in is when we buy goods or merchandise, the shipping or transportation expense that we incurred and paid. So it is freight in, so which is added to the cost of merchandise. Freight out is when we sell merchandise and that we will be the one to pay for the shipping or transportation cost. So it is chargeable to us. So it is considered as freight out. So for example, assume that paid freight and shipment of merchandise to customer is 5,000 pesos. So the journal entry would be freight out is a debit 5,000 pesos, then the cash will be the credit, which is also 5,000 pesos. So how accounting for valued added tax output and valued added tax input is done? So the difference between our output tax and input tax is our valued added tax payable, which will then be remitted to the Bureau of Internal Revenue within 25 days after the end of each month. To illustrate, let us assume that during the month of January, the Ren Company made sales of 350,000 pesos and purchases of 200,000 pesos. This resulted to have an output tax of 35,000 pesos or 350,000 times the 10% and input tax of 20,000 pesos or 200,000 pesos times 10%. So the difference between output tax of 35,000 pesos and input tax of 20,000 pesos, which is 15,000 pesos, is the valued added tax payable. So their respective ledger account will follow this following posting. The following entries are to be made in the general journal. So step 1. So close the input tax to output tax account. Since input tax is a debit, it is closed by the crediting the said, and the debit is output tax as follows. Then after posting the journal entry in step 1, the input tax account is 0, while the output tax account reduces its balance to 15,000 pesos as shown below. Step 2. Close the output tax account to valued added tax payable. Since output tax shows a credit balance of 15,000 pesos, it is closed by debiting the said account, and the credit is valued added tax payable as follows. Then after posting the journal entry in step 2, the valued added tax output tax is 0, while the valued added tax payable shows a credit balance of 15,000 pesos, which sets up our liability as shown below. And the last step, in step 3, this step is prepared upon remittance of the valued added tax payable to the Bureau of Internal Revenue. The above entry closes the valued added tax payable account. In an event wherein the cost of purchase is bigger than the amount of sales, the input tax will exceed the output tax during the month. In this situation, no liability or valued added tax payable is set up. This is, however, being carried up to the end of the calendar quarter. Input tax is presented in the current asset section of the balance sheet, while output tax is in the current liability section of the balance sheet. Valued added tax payable is liability, hence presented also in the current liability section of the balance sheet. And that's all from our report. Again, this is Group 5 of BTL Ed 2C. Thank you.